Okay, hi there, guys. G'day, Gino. Glad you remember daylight saving. I'm just wondering if the people from Queensland might be still waiting an hour or so for this for the talk. Hope you all had a good weekend. Let's wait and see if a few more come in, bits and pieces and dribs and drabs. Yeah, no, good, mate, good. All right, let's just get started. Welcome to Trade Setup and the live stream. It is the 8th of October. Anyone that's new, check us out in the top left-hand corner. That's our Twitter feed. So feel free to like anything and pass it on if you do. It's worthwhile. We don't post a hell of a lot, to be honest, right at this stage, but we're getting into it. Facebook, the top right, and bottom right-hand corner. Subscribe to us at YouTube. All right. Um, Friday night had payrolls out Friday night, which are a little bit less than expected in the US. So what it's done is still, I think their interest rate wasn't interest rate, not interest rates. Employment rate dropped from I think 3.9 to 3.7. They were expecting to come down to 3.8% unemployment rate. So the labour market's getting a bit tighter. It's they're doing very well. Obviously, putting on more jobs, which is always a good thing. But the bonds, they obviously, I think they caught a lot of people off guard. A couple of nights previous when bond yields started to kick up, everyone's expecting it. Um, yeah, you know it's going to happen because if they keep talking up interest rate rises, I was going to say the Fed Reserve, not the RBA. The Fed Reserve have continued to talk it up. They've never changed their stance, but people are getting supported. Well, traders are supported now more and more by numbers. So as the numbers continue to come out quite good, um, support or the proof is in the pudding, I guess, and their labour market's starting to tighten. So I think bonds kicked off a couple of sessions prior, the bond yields, which they were expecting to grind higher, but they kicked off sort of in a big way and caught a lot of people off guard, which meant well, the equities over there got sold off a bit, which we were sort of expecting as well. And then it happened again on Friday, a bit of a sell-off on Friday as well. Well, quite a big sell-off actually. And so that's 2 days running in the US. We'll have to see how that plays out, whether that seller's going to accelerate a bit more tonight or during this week, or what's going to happen. We actually didn't react too bad. I don't know if you saw us intraday on Friday, opened down and then rallied into the close. We ended up for this session after the US was hammered. Um, don't think we'll do that today because the banks are still copying it today and they've broken down a bit. We'll look at those in a minute with the banks in a minute and the financial sector in a minute, still sort of under pressure. So that's what's dragging us down, I guess, today. China is back online also this week. I'm pretty sure they had a week off on holidays last week. So they might be trying to play catch up and dragging the markets down a bit. Yeah, we're down 55 points, but in saying all that, we did expect negativity into our market today. Actually, I'll go over here. Did expect some negativity into our market after what happened to the US. I didn't quite think it'd be down like 55 points. We're down 53 at the moment, but still, our level we're holding up is around that 6100, which we're concerned about more than anything else. Not a big concern. I think if it does get through there, then the 6000 level is sort of that whole number, which is I would expect to provide some support and really react off there. So a lot of the bears will be out playing at the moment, loving it, thinking it's heading south, but I still think it's going to take us a lot more than just, especially our market, to drift lower through 6,000 because that's major support on the weekly charts, which we'll look at that now. Just to recap where we're at. So you can see it's a 61, maybe 61.25. 61.25 is the previous low from a few days ago. 2nd of October was a Tuesday. Yep, Tuesday last week. Low 61.18, but you can see it's that 61 level, which pretty much support now. Could hold up there, may break up. We don't know what's going to happen. It's off a lower high, so we've got the highs up here with a bit of a washout, which we've spoken about a few times. And it's always draw that up. For anyone that doesn't know what I'm talking about, when we say washouts, we say washouts because it's quite clear when you come up to a high, market pops its head through and then finishes below. Especially the way we're at the moment, you can see if anyone looks at divergence, you've got high and stochastic, so it's a good run up here. Next high, that you can see that the effort wasn't quite there on the buy side. Had a bit of a push up, but the strength in volume wasn't quite as there and quite as quite as strong, if that makes sense. Popped its head through, and then we capitulated after that, and the key lows were just through that 62.50. Fell over there, and this has been a bit of a grind higher, so we're always watching this level, bit of a grind higher as we get to that breakout zone at 62.50. Add a bit of an effort. We had a short on, we were going to take a short there, and that little wick, that little green wick, whipped us out of the short, so we didn't actually get in. It just cancelled the alert, and of course, that next session, boom, straight down she goes. Still looking okay at the moment. This could continue. So the level, I feel it could easily just wash out on the other side. So just be careful if you are short, if you're going short. I'm not saying it doesn't look short, but I think the bigger time frame, which we'll take a look at in a second, is the weekly one to be more concerned about. This could be, it's dragging people in on the short side. It could whip out this low at 61.18 and touch on 61, even a few ticks below it, a few points below, and then bounce. This level, I think, if it can't break it soon, I'd be inclined to believe it may not. We'll just keep an eye on it. Just have a look at that weekly and just see how far off. I think it's important. This weekly is the bigger chart that I've got my eye on for the bulls. If you're bullish, this is the one you'd be watching at the moment. You can see that coincides. So we could easily get a long way. And that support level is coming in around 16 still. We could easily punch through that, touch on 6,000, and then bounce straight back up again. And that gives you your lower high. It's all in conjunction to the anchor at around 6,000. The anchor's down through here, probably a touch below 6,000. Could easily touch down there and bounce back up. Hasn't broken trend. The weekly's still up. Suckers in a few bears who think the world's ending again, running for the doors, and then turns around and has a good little bounce. And remember this market, I don't know if anyone remember this market through here. That was hard. That was tough sort of trading. It was a real grind. It looked like it was going to go, and it kept rolling over, making minor, ever so slightly, took out the lows, and then pop up, take out the lower high, and just was a real grind. But there was no convincing price action. You look at it in the weekly, every time we took out a lower high, it was just wicky. So wicking, I mean, it wasn't a full body. I can't even draw that, can I? I'll draw it up. I guess everyone knows what I mean anyway. What am I going here for? So it's always good. I won't say that. So when you've got the wick, it's good just to take note on the longer time frames, because a lot of time it's just there to wash people in, rinsing out of the market, bring some longs in potentially, squeeze them back out, and the same on the short side. So the market can do it, wash people around a bit. And this was really washy sort of price action, choppy price action. Good part of, I'd give 4, 5, 6 months before it started picking a direction. And it's more that reversion to the mean. You can see the MA is getting a bit ahead of themselves up to these highs at 6,000. Pulled back, built a higher low, but spent a lot of time doing it and then took off, took out the highs, enough oomph really to drag it through the highs. Good pullback. And this was more in the two sections that we can see. Pull back, pop up, lower high, pull back again. And again, that was all in context of longer term higher low or the anchor level, which is at that stage was just back here at 56. Anchor level, new anchor level, pop up, minor pullback, up she goes into new highs. So yeah, we're still looking for that weekly. Longer term, this market can do what it wants. I still think it could be grinding high to that 68 to all-time highs. Like I said, we haven't been there yet. The US is into new all-time highs every second day. The FTSE and DAX are pushed to new all-time highs since the GFC. We haven't. We've been lagging quite a lot. Now, the one problem, we'll look at the Aussie, is more the carry trade. Now, I don't know if he's on there now, but we had Bitwise, who was on the, not the live stream, he's on our chat, was talking about the carry trade into Aussie. Now, if anyone that doesn't know, a carry trade or currency carry trade is when you're buying one currency, selling the other regards to interest rates or the interest rate outlook. Now, we don't have any, there's nothing on the cards for Australia. So the Aussie dollar Nothing on the cards for interest rate rises. Every time we have an RBA announcement, they keep interest rates on hold. No talk of anything soon, considering the environment, what's happening over in Australia. Um, so yeah, nothing on the cards for us at all. But whereas the US is now talking another 4 or 5 interest rate rises, so the carry trade would be to buy US, sell Aussie dollars, and if you're going to buy one currency, you have to sell the other pair. So the carry trade into Aussie is obviously um, down. If we just get a chart up, so the Aussie's been heading south, and you can see that there's this big push down for just above 80, 81 cents. It's just been grinding low, and it just recently took out 71.64 or 65, that zone, and still heading down. So the next major zone really is all the way down to sort of that 68.5 cents, or say 68, 69. So you've got a big zone down here where we've traded before. Just make that a bit clearer. So we've got this big zone around 69 down to say 68.30 thereabouts, where the Aussie could be heading. So that's another 150 points to 200 pips lower. So there could still be quite a bit of weakness into the Aussie, which would mean, you would think anyway, maybe if the carry trade, generally when they've got the carry trade running, there's bigger funds flowing, and generally if you're getting into US dollars, you basically, I mean, you've got to park your money somewhere. You can either park it in bonds. They might be looking at US bonds too. Um, in essence, it's like funds leaving Australia as well. As best I can understand it, funds leaving Australia, and major funds are always flying around the globe looking for yield, whether it's in currencies, bonds, whatever. Um, at the moment, the carry trade looks like it is out of Aussie into US, which there's been talk about that for a while. The Aussie dollar just heading south as the US dollar continues to grind higher. And I think net long positions on the US as well has increased to a record high the last few days, and that's buying into the bonds. US dollar's been banging around a bit, but still it's been on a gradual climb. So it'll be interesting to see that. I think maybe that Aussie is a bit extended just at the moment, so we might have a bit of a pop, build another lower high, and just continue our way down to that 68, 50 zone. So yeah, it may mean that our ASX ends up still, a bit choppy, but we'll see. Either way, all we can do is trade what we see, can't we? So that's the Aussie. We've gone over that, haven't we? Any questions? I'm making sense there, guys. You can see the Dow. That's a weekly chart. Let's just go back to the daily. A few days ago, popped its head into new all-time highs up towards 27, and that was a bit of a just really a clean out of the recent highs through back from the 21st and the previous day highs as well. Took those out. Next 2 days have been south as bond yields popped up in the US. And this is a lot like what happened at the start of the year. We got a bit ahead of ourselves, but that was a big capitulation. Who knows what's going to happen from here, but I wouldn't expect that's what's going to happen, especially if there is a carry trade into the US dollar, because overseas funds come into the US dollar. Like I said, parking it somewhere might mean equities could start to shine a bit more, or might be supported a bit more. But we'll see. I think this came out of the blue morning. That was sort of a bit out of the blue, and everyone didn't want to give up any gains there. But we've had since then a lot of people being washed out of the market. It's found some more support, built higher lows, and continue to grind. And see this move up here recently is a lot more controlled than sort of the last few months of that run up through end of last year, the start of this year. It got a bit ahead of itself, and you can see that in the weekly chart, like those green candles up, up, up. Bit of hesitation there, and then we had a nice green push up, green candle. Next couple of weeks gave up quite a bit there, consolidated, but we can see that's a bit controlled. Still, it's still quite a way away from the moving averages too. So it may have to spend some time. Could just go sideways by consolidating sideways. But we'll just have to keep an eye on what the US is doing. That's the Dow. We still got, was it China and the US? There's probably more news to come on that. I don't know how that's going to play out. China being back off holidays too, they might have something to say. I think they've lowered their banking yuan requirements of what they hold in the banks, which means it means less cash they have to hold in the banking system, which means, I guess, potential support for the yuan or the currency over there. But that was the most recent change. I think that had come out over the weekend. See what we've got there. Dow, S&P, pretty much the same. I think we're right down on sort of that anchor level, which was down at 28.64. See if we can bounce off there, can start to find some buying support. Otherwise, yeah, it could just pierce straight through. But we'll find out a bit more in the coming days. Whether that's broken down, I just want to see something first. Yeah, so it's right down in that support now, which coincides more that anchor level at about that 28.65, say 70 zone. So we pulled back, had a bit of a pop up here, gave it up in the little double top there, straight back down to the anchor. So if we can't hold up here, longer term we could be seeing a bit of a major sort of correction on in the US on the S&P, the major as a broader market S&P. The Nasdaq's been beating the overall market down, underperforming quite a bit the last few days, which is expected, being that was the main contributor to the big run up we've had the last year or so. So that's the S&P. What else we got here? FTSE. That doesn't look so great in the daily chart, but the weekly's hanging in there. It's not too bad at all. Your key level's around that 72, but you've still got a major level right down at 69. So we're a long way off that. DAX actually doesn't look too bad at all, really. It's been sort of grinding lower, which a grind like that, I'm expecting buying on the way down. That's the way I view that. It's not severe like we've seen this sell-off from the highs. In two candles, we gave up 1,250 points, over 1,000 points. Whereas from that same sort of level, we've come back down to 12, but it's taken a hell of a lot longer. It's been more of a grind, more controlled. So that there, I'd be watching on the DAX for a higher low to start holding if it can, and see if it can pop up there. Still, they've got a few issues with emerging markets. I think Turkey is still a bit of a problem, and Italy especially. I think it's the third largest economy in the EU or in the euro. They've got a problem with their debt. They don't like having low debt. The EU likes them having a low debt. So I have to see if that continues to put pressure on that on the EU or the European Union, or what if you want to call it, the euro. Now, let's get into it, guys. Enough of me yabbering on there. Now, we just added a new trade today. It's on Red Bubble. Been watching that for a while. It's at 73.5, and it's now at 76. So you've got to love it when a trade goes in your favor straight off the bat. So it's always a good sign. It could have, the daily's starting to get to that extended level, but the way it expanded today, that's RBL. Anyone got that? The way it's expanded today, I kind of like that. You don't like when it pops up and just goes through your level and kind of grinds sideways for a bit. It's never a good sign when it's getting up to that overextended level on the stochastics. So it's actually a good day at the moment for us on that. And if that can continue into the close and hold up at 176, even higher, up towards the 180 into the close, I'd love it if it was 180. But if it can hold on to these gains into the close, I think it's going to drag in some more buying tomorrow. And the weekly, looking at the weekly, stochastics got a long way to go. That could really start to kick off and get straight up through. Was it 185 high? 185 high. Get through there and start attacking up towards $2. But that longer term, you can see that price action very nice. Had a big run up, good pullback. We touched on this level around 114. Was it 1, 2, 3 times here before we popped up? Took out the anchor here just below 170 on this move up through 180. Pulled back, built a higher low, in with you can see a little washout there. Held that level above 150, and we're starting to lift now. So if we're starting to lift from here, you would expect us to get up and through 180 before we have some sort of major correction. So this is looking good. This is a red booble. TER had some decent news today, and it's been a bit of buy the room, sell the fact on that. Plus, that is very extended, so the weekly looks a lot clearer. Talk about extension. That's been hovering around overbought for quite a while on that weekly chart, and it's just been kicking off big time. So they're doing quite well with their coal. Couple of good agreements. I think it was Korea and Japan. Excuse me. Couple of good export agreements there. Or offtake agreements or something like that. I never know the correct terminology. So they've come out with another good announcement today, really positive. So yeah, I would have thought we might get a bit of a spike. But what that's saying to me, without a spike on that sort of news, when it was a bit of a surprise, either everyone knew about it, which I don't think everyone would know about it, or we're just running out of buyers on the sideline who are really willing to support this stock at higher levels above 75. So it could mean that time is running out on this move for us. We may get stopped out. So we've got our stop at, don't remember, where is our stop? TR, is it 60? So I'm going to move that pretty quickly. I thought I actually moved that. Did I move that? Or didn't I move that? I didn't move it. So I want to raise that stop soon. I've got to, I mean, the problem with this, and this is a really good example of stop placement. You can see that the ideal level, let's get in here. Let's make this a bit, I thought I'd just touch on this while we're looking at it. The ideal level is below 60 because it's below a higher low. You can probably push it a bit higher at 62.5, but technically that's probably where your stop should be, because if you put it anywhere here, say 72.5 or 70, you can get stopped out. It can pull back to 67.5, build a major high low, bring in a lot more buyers, and off she goes straight through 80 up to a buck, and then you're sitting there on the sidelines. You've been stopped out, um, and then you're missing out on that all that upside. So that technically you really should be just looking to put stops below higher lows, because you've got to be proven wrong. If you get stopped out there, something's not quite right, something's not working out, and you've been proven wrong. You've been kicked out of the trade, and look, it could pop up, build a lower high. Anything could happen from there, but odds are that when you get tagged on a stop below a key sort of a level, um, it's always a good sign that there's more selling pressure to come. Because if it was a strong market, they shouldn't be breaking these higher levels. They should just continue to kick on strong, maybe have a bit of a correction, clean out a few late buys that potentially are in there above 75, clean them out, off she goes again. You just get these higher lows all the way up. So that's the problem we have at the moment. If we do raise it, that could happen. We could get tagged on that, stopped out at say 70 if we put it there, and the market turns around and all it is building a higher low and off she goes again. But if we leave it here, it's really hard to give up. I don't know what that would be. It'd be about 15% off the gains. And I always find that just as hard to swallow, um, especially when we're actually up quite a bit on this one. What are we up? 50% on this second trade, the second half. Entry from 52 at 77, I think that is. 77, 78. 78 is 50% gainer. So really tighten it up. It's a bloody good trade at the moment anyway. So not too concerned. If we do happen to tighten up and get stopped out, so be it. What's on the next one? We got CDA is still hanging in there. It's looking set to continue up, but I think the overall market at the moment is probably pressuring this down a bit. Wesfarmers on the short side, that was looking good today, looking for a partial, and the thing has just bounced back up again. So I think they've just offloaded Coles, or they're looking to offload Coles, which found some selling on the open, which got rejected below. We're looking for 48.50, which is down at these lows, a partial here. May have to take it below 49. Either way, I mean, it's not a big trade. It's it's just a slow move. Any sort of move down, it looks like it's good on the counter, but percentage-wise, is not much at all. So we've got quite a tight stop on this one now. I think it's below, just above 50, around 50.50. We're in at 35, so 15-cent risk is really not even a percent, 0.5% or whatever. So that's Wesfarmers. Molly's going all right. 22.5 entry. It's at 23 now. I want to see it kick through 24, and I think that gets straight to 26 pretty quickly. Got our risk just below around 20, maybe 20 and a half. Probably looking to raise that soon, especially if it gets through 24. When I raise that up a bit, we'll be looking to book a partial up towards 26 if we can. But look at the weekly. The weekly looks good. You can see this run up. This sort of contractive price action, one good move back, which really cleaned out a lot of traders. You got these buyers jump straight back in again, and they've been cleaned out of the market. And then you can see it's popped up and built another lower high, but just about here we've started to hold a higher low off this lower high. So the price is starting to squeeze in, but we're starting to lift in another high low at 17.5. So the weekly looks really good. That's why I'm pretty convinced we're going to get up to 26. It just seems to be a slow mover at the moment. I think it's just, again, just capped by the overall market and negativity out there at the moment. So that's us, guys. What do you want to take a look at? We still don't have too many people in. I think we're caught out by the times, haven't we? The time zone, the daylight savings. If you want, just put whatever you want to have a look at into chat quickly, and then we'll get going. There's probably not too much more that we've got our eye on. Yeah, nothing for me is setting up really well at the moment. We do have SLR's one that I do like, and you can see this weekly. This is Silver Lake Resources. If anyone's been following this, big pullback. We had the sort of a run up here back end of 2016, 17, started 2017, big contraction, and we started holding a higher low towards the end of last year. And into this year, we held an inside high low. So that's within the most recent price action, which is lower from 80. So this was your move down, inside level. So that led to a good little run up. Again, we got this price action that's pulled back, reset itself, and we're potentially looking to lift at the moment. So just keep an eye on that SLR. And the reason I say this is a major, but it's not a major high low just yet. It's not confirmed. I'll be happy with this once we get a break up through this high at 57. I would like to see this price action just chop around here below that, was it high 57? Just below there, play around in there and then start to lift. And if we get that acceleration up through 57, I'm pretty confident that's going to confirm that higher low at 46. And that high low, that major weekly high low is going to be confirmed when we get up through 64. So it's just all what we're doing is trying to piece together the puzzle, piece everything together and think, okay, we've had this pullback, we had a run up, we've had a pullback, selling fell short up at 46, so there's some buying pressure in there. It didn't get down here, so if it's a weak market, we should have got right back down to 34, but instead it's showing some, strength in buying, in numbers of buying when it's popping up at around 46. It was starting to hold at 46, and that level has just been confirmed with this sort of run up. And if we pull back here, again, if we found weakness, you would expect us to roll over here, and then we'd take out 46. But instead, if we're right about our buying pressure, it may chop around here and start to lift again. You want to see it start to lift. As buyers who potentially missed out here, missed out on this leg up, missed out here, are getting antsy. They're starting to get that fear of missing out, that FOMO, and starting to wanting to chase. They want to be into the market. So showing some strength, they may not hold off anymore, may not look for those pullbacks. They just want to jump straight in and start to chase it higher. And the more strength that starts to show up, I think you get more of those buyers who potentially missed out that want to be into it will have to start chasing it. So I'm always happy with that. That's another good little one. And we got EGI, which is just remember this little grind lower on the daily. Actually, I'll just see what we've got here. I'll draw it up on the charts. I do like this one. All right, so you've got clear levels up at around 117. The market, I'd say, from about here we've been grinding lower. We've got levels through here to about 104. Bit of a clean out there. That moved down, but you can see what's happening. It's popped down, sort of started to grind. This is a good sign too when you come all the way back up to a key level, and you start to get these secondary move down, which is a bit. It's not done in one move. It's done in a couple of different legs, as in one leg pop up, another leg down. Then we've got this little pop up again and then wash out of that level and starting to hold, and then we've lifted up. So at the moment, just clear all that out. What I do like is do yellow. Is the fact that we're just getting that sort of grindy price action now. You can see it's probably clearer on the daily, and we're in a good zone on the weekly. So what you're always looking for when you got this type of price action It's lifted up. We've had, and this is all part, all this grind is all part of a different chart. So this is your daily grind, but on the weekly, this is just a one pullback on the weekly, and then we're looking for that secondary move up to take us, the same, probably the same sort of maybe volatility expansion from that low to high around just below $1 up to about $1.17. Take that for about $1.04 is going to take us up to say $1.20, 25 area potentially if it gets through the highs at 117. So we're looking to trade this leg up. That's what we're looking to get, take part of. If our plan, if what we've analyzed is going to work out, if it doesn't, okay, we take either a loss on it, a small gain, or break even. It doesn't really matter, but that's what we're looking to take part in is that rally. All right. So what we've got, the market's contracted lower. We're looking for our first sort of daily high low to work from. So you've got the markets come down, and then we're starting to show signs of holding up, and we're looking to take part in this once we get that somewhere in there. And I think that's what we're starting to show now, that sort of choppy action lower. And then we just want to go, flicking it down to the daily. That is the daily. Potentially offer, again, another minor high low. And all those high lows, I could just go from one chart from weekly to daily to, even intraday if you want an hourly and work off high lows. And all that's doing is adding that confirmation, that extra layer of confirmation to your trade and making it a higher probability. So if it's a weekly high low you're starting to work off and you're using a daily high low for your entry signal, that's another, that layer. If you go down to an hourly chart or whatever, which you probably no one really would, but it's just that extra confirmation of the market's really starting to rise. It's going, you're on the right side of the market. Yeah, if we can get this, if we can get off this here, the market's popped up, pull back. If we can just get this little high low like that, yeah, I'd probably be happy to look for an entry. It means minimum risk. We're starting to go on the right side of the market when it's rising, not when it's in pullback mode. The market's starting to expand. Remember, we always like to trade a market that's expanding, not contracting. So you want the market to contract and start to go into expansion, and we want to be part of that expansion because that could be, like I said, the weekly leg up where we've got that earmarked for a bit of a trade on the weekly leg up, and we're looking for entries off the daily chart, even lower if you want to. All right, so that's EGI, which is Elliston Global Investments. So they may be struggling the next few days if there's a lot of negativity around. What was the other one? SAR. All right, Saracen, good old Saracen. Yeah, this one it's probably more news driven, I'm guessing. What's happened news wise? The reserves grow by 20%. Good drill results was at 31st of July, 1st of August. Nothing much. Production record profit. So the kicking goals, it looks like. Excuse me, guys. Sorry about that. I'll just look it over the weekly because this is probably the first decent correction. So I'll be viewing this, if I want to take part in this price action, or in this stock anyway, not price action, I'll be basing it off the weekly chart. So again, we've got big run up, pull back, and you can see this is what we're talking about with the market starting to lift. You want to be, when the market's contracted, you've got a high low in place and then it's starting to lift like that. And you want to, this is ideally the area, if you can drop it down back to the daily chart, to look for your entry setup where you're just not going to take too much risk, but you know that way you've analyzed it, you're looking for, this is leg up, this is your pullback, and you're looking for the next leg up, which is pretty much played out by the looks of it. I wish I had a measuring tool on this. It's about, say, 30 to 40 cents up to around $1, 70-cent rally. Add that to about 80. What does that take you? $1.50? Is that right? It's not $1.50, is it? Oh, it's $1.80. So it's $1.80 up here. Yep, $1.80 from 30 is $1.50. Add $1.50 to about, what's that, 80 cents? It's $2.30, which we pretty much, so you can see this leg up here is pretty much equal to that leg up there. Don't worry about steepness, it's just from, well, let's do this, this would be better. This is what we're looking at. So that from low to high, that's your leg up. From low to high, that's your second leg up. So we're pretty much, for me, was on the weekly, we've finished this leg up. So I'd be a bit cautious of just trading long on this one without a decent, I want some sort of correction, corrective action. Now, let's give us a new, clear all that up. What we did here was we did correct. So we corrected, this pretty much went straight up. Then we corrected, boom, straight back down, started to build again. And it was back down to the MAs. We're about here. It went straight through the MAs. Then it spent a lot of time contraction on the weekly charts, and then started to lift again. So now I really just be reassessing this. Is this the correction? Whereas a lot, it's about a half the size of the previous correction. Or are we just going to sort of drag up and then boom straight back down again, have a deeper correction down to $1.50, say, before it starts to lift? Which, that's just my concern. So it's really just going to drill down to those daily charts to see what that's saying. It's just interesting to see this actually. So last time it corrected, this was the low, popped up, and then you've got this price action to trade from. So that was an ideal trade. All right. So we just have to keep an eye on that daily chart. If we just draw that up, I'm not too keen on it, to be honest, just on the daily chart anyway. It's slow today on this. So that's our leg up. I don't think that was from $1.50. So we've had this leg up. What we've really seen, the market did pop up here. You've had two moves down, so really anchor levels about where we are at the moment. What I don't like, the only problem is this good pop up, really in a few days. We've just popped up now through $2, 202. I don't like the way it's come out. I think the way it's just rallied up so hard. I'd rather see a bit of action. I wouldn't mind seeing if this was retested down at 185, but I just can't see if I bought this here. I would probably want to have my risk down at $1.70 for me. That's way too much at the moment. I'd rather see, we've had, just say, well, this is our, I'll draw that a bit better. So this is what I'm looking at, just this move up here. We've had that pop up, pull back, and we just got through it to about where that resistance is, just above 2. It's about there. So ideally what I'd look for is a bit of a grind. I wouldn't mind seeing it come back down and test $1.85, but not just in one move, not just down like that, but in the two moves, which means to me that's saying that, okay, we're getting down there, but it's getting soaked up on the way down with some more buyers just jumping in, trying to buy into it. I mean, maybe they've got a bigger position to play into, or there's just some other buyers that are just sitting on the bid. They're getting taken out as it's moved down. Whether they're going to be right or wrong is another story, but it's just a better sign that the traders, the bias is going to be up. That's what I'm trying to explain. If you've got this move up like this, and then boom, straight down in one foul swoop, that's more selling pressure. There's no real buyers standing in the way of the selling, willing to soak it up. Whereas this is more buyers are happy to stand in there, whether they're just edging into it day by day or building a position. And then, of course, from there, you'd want to see maybe a little bit more contraction, and then your higher lows start to hold, where you've got the entry, and all this is going to be a higher low, don't forget. So this is ideally what I'd wanting to be see if it gets retested 185, say, it starts to hold some inside levels between 2 and 185, just some inside high lows, then it give me more confidence. It spent a bit of time, so that's more than enough time for the market to turn negative, to turn sour. Sellers were going to take control. They would have started taking control. But if they don't, and we get these higher lows start to build, then you can see it starts to show what quite clear which side of the market is going to win out, buyers or sellers. And I'd be biased towards the upside if I can see this price action. If I'm biased to the upside, it's just about the entry. So just at the moment, what I don't like the way it's popped up quite hard, had a little 50% retracement straight up into that resistance zone. We're at resistance. I can't see any setup to buy it off just there. If it blasts through and just keeps going, good on it. Then I just call this one a missed trade. And don't forget where we are at the moment. We're extended up at sort of this $2. So I think it's going to be struggling up here. So I don't see any reason to buy it. It's just really a matter of patience for me. Does that make sense there, Murray? Any questions, guys? Excuse me. Bit of a throat problem. All right, anything else you want to take a look at? If there's anything else, just chuck it into chat. Otherwise, I'm just flicking through now. Probably a lack of people means it's a bit of a shortened session. Too many Queenslanders and Perth people in the chat in the stream. They're probably still waiting for it to start. What do we got here? Oh, MND. So there you show you, mate. Anything you want to take a look at? Well, while there's something coming, I'll just show you. All right, look at this STA and Galaxy. Will do. What was that stock? EGI, just in case I forget. All right, let's look at MND quickly. This is a good weekly chart. Just keep an eye on that one. Weekly, I mean, so this, you can see this is the overall price action. You can see down here. It's probably a bit tougher to see. That's your general overall trend. Actually, what's happened here? You can see that monthly. So we had this push up, pull back to about, what's that low? 525. Big run up, but then it gave up pretty much all those gains straight back down that 525. Monodelphus, this is. Lows are, 532. It's about the same zone. It retested and it started to lift again. But so that's not bad. Longer term price action, that's a retest of that zone, and we started to lift. So we're showing buying strength again. It's just as you drill down, are we still showing buying strength at the far right hand side of the chart? So we've assessed the general overview of the picture of the action. We've got run up, pull back, build up major high or low, up she goes again, all the way back down. You never really want to see it test all the way back down again, especially when it's been up to 27 bucks. Straight back down, retested there. That's held up, so it's a key support level. So what was it, 550, 530, whatever it was through here. Started to lift again. So as we drill down and we're just interested in this right-hand side, are we going to see this was the run up? Are we going to see pullback and then another run up? Continue, or is this just going to be another lower high in context of the weekly chart and we get sold off? Then we could be looking back down to $7. Right. So what I'm really looking at, I like the weekly chart on this. It's more actually, so we can go back into the daily. I'll just take that one step across. So really, I'm trying to figure out, am I going to be biased up or not off the price action? Because I think longer term, yes, we're biased up. We've had a good run up, and we're in corrective price action, corrective mode at the moment. You can see off these highs that are just below 20 bucks. But are we going to start lifting again? And I do think that it's starting to show some really good signs. So really, it's just drawing your lines in, getting a pretty picture, and you can see quite clearly you've got a support zone around 14. The market sort of popped down, popped up, pushed out another run down, popped up, straight back down again. So it's had quite enough time, or quite a bit of time, just to clean out a few of these buyers, late buyers, pretty much from 16 bucks above. Anyone who sort of bought it up here has been cleaned out of the market. You would expect it anyway. They've been cleaned out with this corrective price action, but then you can see what we've done. Lower high through here, potential area or zone to be a lower high, bang, we start getting sold. We're getting supported at 14, popped up, try again, popped up through here, bang, down to 14, got supported, and then we had a good leg up. So at the moment, what I'm really looking for on this one is just to see we're right up into that resistance at 1675. I think this corrective action is coming to an end and we're starting to engineer a leg up, but it's just a matter of looking for that entry zone. And I don't think it's up here because we come up into, it's an anchor to this trend down. That's your key level at 1675. We come up there, we're stretched at the moment. So if you want to throw risk at this, I think it's a low probability trade because there wouldn't be too many buyers. And what I'm talking about with stochastics is when it's overbought, oversold. I think buying pressure. This is your buying pressure when it's going up into overbought. Now, when you run out of buying pressure, it's in overbought territory. And if you're running out of buying pressure, meaning out of 100 people, 90 have already bought, there's 10 left, can those 10 people really have enough oomph to get it through that and continue on without a pullback? Because the higher it goes without a pullback, the less and less people want to jump into it at highs because they do expect a pullback eventually. So at this level, really, I'm just watching to see if I can pull back, pull back and then start to engineer that leg up for our entry off your higher lows and see if you can start to kick up again. And then you've got your longer term off your weekly high low. You've broken out of this downtrend, out of contraction, rather than just go sideways. We're starting to look like we're heading higher because we're going off a higher low. And if you do go off a higher low and it's somewhere around 1550, and we are just ranging between 1675 and 14, we could just range between there. We don't know yet. We could be stuck in this range for a long time. If we are ranging it, at least you're going to know that when you're in profit, rather than buying it up towards the top end of the range, find out it's ranging, getting stopped out, or having to ride it all the way down to the bottom end of the range, taking quite a bit of heat. Testing the willpower and the nerves, because it could easily roll down, out and through the bottom end of the range there. So if you do buy it off, you get this price action that pops up and you're still range trading, you find it does roll over, you could just call it a day, book a small gain, reassess it as you go. But if you're right and it's not ranging, it's starting to break up and out, then you just ride it on the way up. As the picture becomes known, more and more people are going to start to get in because they're going to be next level up is towards that 1950 or $20 highs. And then you're already in around the 1550 mark. And you're pretty much just going to sell it to the latecomers or just ride it up with them. All right, so that was Monodelphis. I like that. Satish, what have we got? STO. STO is heading higher. Of course, it's extended up here. You can see that sort of overbought zone. But last time it was overbought, it was around $7, and it stayed overbought. Some heat come out, went and it's back to overbought now at around 750. So it is a grind. If we get into the weekly's not too bad. The weekly's, look, it's just a longer term sort of a trade. I think these ones are down 62 at the moment, guys. Excuse me. The weekly is what I'd be just keeping my eye on. And again, that's overbought as well. It doesn't mean anything. I mean, just because it's overbought, you don't get out. What you're doing really is just be wary. The way I would treat that when the market's sort of in that 90% range on the stochastics is to tighten up the risk, because I know that sooner or later people are going to be chasing their tail to get out and book their gains. And I don't want to be caught up, having wide risks because I'm leaving it open. I'm getting my head saying, my ego saying, I want it to go higher. It should be higher than this. Why isn't it higher than this? Doesn't matter. I'd rather just tighten the risk up when we're sitting around that stretched or overextended to the buy side on the stochastics. That for me is just an indicator. So look, just maybe tighten it up a bit. We could be getting up towards, let's say, $8. Tighten it up. If we don't, we get stopped out. I'll book some gains and I'll reassess it as we go. But either way, this weekly, that's your zone through $3. You can see the way it's come down off that, popped up off a lower high, come back down to retest it, tried to go again, come back down, and this is the most recent failure, as you can see. So we've got a low here, touched it again, and that's a good sign. That's a positive bullish sign. Once you test it and fail again, you can see that by the time it's lifting, you don't need to wait until it gets through. This is your lower high. You don't need to wait until it gets through here to get confirmation. It's more that it's broken out. I mean, it could chop around here, but if you're on a daily and you're watching this and you get a pullback in the daily, it's worth a bit of risk knowing that you could be moving up to the $5 mark. But either way, on the weekly, we've got this is now lifted, pulled back, retested that breakout of 5, started going again, retest. So it's just grinding higher. So on the weekly, it's like I said, it's looking extended. You've got the next key level up towards 8. Doesn't mean it's going to get there. You might, two scenarios. It consolidates underneath and then blasts through. There's going to be 3 scenarios, isn't there? It rejects just here a little bit early because everyone knows the market's extended. Crude's taken a bit of a pause at the moment. Um, oil could keep going high, but don't forget it's a struggling market at the moment because all the headwinds. You've got OPEC is just talking about raising output with Russia, even though Iran is going to be offsetting that. They're only doing that probably offset the losses in supply from Iran. So I'd say crude is well contained. Now, if that's the case, STO is a bit extended. It's getting up to 750. Are you going to sit there and wait? Is everyone going to sit there and wait? And you've got an inside level at pretty much where we are at the moment. You can see from these highs, it popped through straight back down. So there is that level right now, right where we are, around the 750 zone, is where people might just get out early. So look, I've been riding this up from $5. It's now at 750. I'm up 50%. Let's just book some gains on this. Or you might see, a few people starting to get the same idea. So that's our weekly. If I was a buyer now, wouldn't go near it. I wouldn't touch it from the weekly chart anyway. And I don't think the daily's showing me any reason to buy it at all. It's just this price action looks good. If you've got the balls and you can hold that, thinking that longer term we should be higher, that's great. You're probably going to be right. But when are you going to be right? That's the question. Are you going to be right next month, next year, in 2 years' time? Because this easily can creep down, spend another 6 months creeping down to build a higher low, settle there for another 5 or 6 months, so that's a year, and then start to lift again a year and a half later. And then you have had to hold something to get back to break even at a year and a half. No, I just would not want to do that. I'd rather put my money elsewhere. So that's why I wouldn't be buying here, purely because it's extended, sticking to my rules. Market's extended, wouldn't go near it. There's no setup yet. If I bought here, my risk would have to be below this most recent high low, which is at around 550 thereabouts. Too much risk for me. So I'll just be keeping this one on the radar, and I actually have got this one on the radar anyway. So back to the daily. Again, if you're buying it off the daily, again, for me, my risk is going to be below 650. And even that's too much risk for me. And if I put it up here, I think the markets are well and truly too extended. I'm going to get stopped out if I bought it. And I had risk at, say, 720, for instance, which is really the only other area which I'd probably be. But I'd want to see it break up and through highs at 747. So buy at 750 with a stop at 730 or 720, say, 30% risk. But I'm inclined to, if I actually did that, I'd be inclined to expect to get drilled on that. Anyway, that's STO. It's in there. So if you did get in nice and early, Satish, great work. Just be wary, mate, with your exits. GXY. GXY is on the way down. Just look at the daily. We've got extended to the upside, so quite a bit of buying pressure. We've essentially come off these lows at 240 up to, could only get to about 280, 290. And the last lower high was at 310, say. So the buying pressure to push it up couldn't get near, we couldn't even get up to $3. Not a good sign. It still looks like to me there's some sellers coming in. Anyone that's buying, opportunistic buying off here because, they're remembering what's happened in the past with Galaxy. It's still in the back of their mind. It was a good stock, blah, blah, blah. Fundamentals still like it. This could still be putting the squeeze on those buyers and continuing to squeeze them out. If you go back to the weekly is actually showing a better story. All right, so the daily, there's nothing really changed yet. The market's heading south. We're in overbought up here. So the daily I wouldn't get in if I'm going to go long anyway. I'd be more inclined, not that I would go short, but more inclined to be looking for shorts because the bias is down. And it has pretty much been down most of this year. The bias in the market's been down. We've got a big sell-off down here, consolidated through here, another, then continue to head south, taking out those support zones. So the daily's down, but if you go back to the weekly, it's not too bad. Draw that up. and because it's pretty much the opposite run up here, had this type of price action, good level through 160. It's worked its way off 160 up to about 460. And now all we're really doing from here is we're in pullback mode. So this leg up is contracting. So what are you looking for from here? Is really just you're looking for a pop up. So potentially, what's that? $3. If we can get up to $3, that means it's broken out of this contraction, and it's the same old thing. You know, you've got this move down up to $3. Say we've broken out of that contraction, and then from there, it's really just looking for a place to buy, potentially on your daily chart. Look for a reason to buy. Look for a high low on your daily. I mean, look at the selling pressure on the weekly. We're down in sort of that oversold zone, which would mean that we've had two legs down, one, two legs down. That's in context of this leg up. So the weekly trend is still up. Its main anchor level to that uptrend on the weekly is $1.60. So that's what we're facing. We could be facing an area or a zone where buyers might start to edge in. And if they do edge in and we get this price action, then yeah, could be time to look for a buy. But you want to see it break up out of this contraction down here. That's the key. If you can break up like this, this is the leg we want to see play out. If we can do that, break up and out of this contraction lower, then that's where we'll be looking for our higher lows on the daily. But yeah, that's Galaxy. I think it's one to keep an eye on anyway. IGO. What have I got on IGO? It's a bit of a mess, really. Even back to the monthly, I mean, you can see that. I know it's a monthly chart. And I want to say this. It's longer. I mean, things can change business-wise from a lot of these companies. That's sort of your monthly chart there. When you're looking at levels, it's some longer term contraction. High lows here. We've got lows down at say 250, 2 to 250, which is a key level. But you can see it's just bang, 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 bang. Whoops. You can see that action. There's nothing to straight back up. We've really only couldn't get up to that $6. So we couldn't get up here on this, which fell short of that $6 level, which means it's still holding within that contraction longer term. So where to, we don't know. We're just going to really see if it's holding this high low. We could be coming down through 4 to build another major monthly high low. If you go down to the weekly, you probably see we're just interested really if this is going to be retested and the high lows at 4, or we're going to take out 4, press down a bit more to build another high low. So on the weekly, I'd be looking, probably wouldn't need to go into the daily. I just want to see what the weekly is telling me first. And this is what I'd be eyeballing to see if it can potentially maybe retest down to 4. So this is a major leg up, major pullback, major leg up. And it's all within context of that high at $6. And this is your leg down, but you can see we just break that down a bit. This is 1, 2, 3 legs. Is that clear, guys? Just what I'm showing on the, or should I do that a different color? I'll do it back to my blue. It's probably easier to see. 1, 2, 3. So it's had that sort of 2 legs down, which means I'm always looking for 2 legs and then start to look for some buys to step in off a high low. At the moment, we haven't got that, but we could be there. You know, I'd rather see it pull back, build a high low, it or retest 4. It doesn't bother me, and then just working off a high low on your daily chart. So going back down to your daily to see if we can get that higher low to work from and see if we can edge up. And this is going to be a longer term higher low. Does that make sense? So this is the zone off where weekly. What we want evidence that that's going to be our higher low, like this and like this. 1, 2, 3. All right. It hasn't played out just yet, but that's what we're looking somewhere in that zone. We're happy to buy it, and we want to minimize our risk for a potential another leg up and start to attack $6. Now, if you buy at 450, 475, you've got a 25-cent stop. That's, or even a dollar stop. No, probably not a dollar stop, but a bit 50-cent stop. So 475 down to 425, where your risk is off a high low, off your daily, and you're running up to 6. that's a 2-to-1 trade anyway. So just going down to the daily, I think it's extended up here. So I think we're just going to correct and then just be looking for if we can get a higher low to work from on the daily charts, just with the context of what we just spoke about on the weekly. All right, we'll quickly do SWM. We'll probably finish there, guys. Oh, 7. I've been watching this one. I think there's enough fat in this one that it could actually start to lift from here. Doesn't look any good on the monthly. I mean, there's a lot of fat to the upside if nothing's changed. You can see it's just got poleaxed since the GFC. Hasn't looked good. So don't really worry about the monthly too much. It's more the weekly we're going to be interested in. Now, taking levels, probably it's not a serious level through there, and we've just breached it with this move. So I say that zone is going to be a bit of a buy zone there. You've come down, popped up. So this is your lower high. It's around 160. There's another lower high around here at about 120. We've worked back down. We hovered around this previous low through here, here, and here. Went through it and then pretty much proceeded to lift from there. So just drawing all that up, you can see we've lifted from there. So on the weekly, I mean, there's a case to say, I mean, there's a trade here potentially. You will see it on the daily. It's pretty clear cut. I mean, if we do pop up and we're going to fall short at 120, we're not going to have too much risk on this trade if we did trade it for this little pop up. But the weekly looks like it could be due, even on the, just so before I keep going, on the daily you can see stochastic went into overbought, pullback, didn't really go anywhere, went sideways. So up sideways when the market was, when some selling pressure coming in. So the buyers were soaking up, have another pop up. And then what we've done is pull back when again, sellers are coming back in and we're looking like we're turning. So it's holding again. It's probably about a 50% retracement of this little move up, of this leg up. We're holding here again around that 1, above and below 1. So it's showing still some buying strength. So in that case, you know, you could be looking for that pop to 120. You could even be looking for that acceleration through 120. And a lot of the times when it holds below a level and it moves up, it falls short, it has to consolidate below that level. A lot of the time that could lead to just a break straight up and through a zone. And if that's the case, we're going to break straight up and through, then you'll be targeting up towards $1.50. So it goes away from, say, a 1-to-1, or 1.5, or 2-to-1 maybe, depending on your risk, to coming out to a 4 or 5-to-1. I mean, it could easily do that. And by saying that, you can see that just getting up through, which is probably not a great sign today, that the fact that we probably took out those highs. What was the most recent high? 103.5. We've got the 104 today, was it? Or 104.5. So, I mean, if you did happen to get in, the only difference would have kept me out is just looking for that higher low, knowing that, and I say that because of the weekly chart, we've had move up, move sideways, leg up here, pull back, and we're actually going sideways at the moment. We haven't really broken, and I see we've retested that low. So we're sort of in that consolidation. We just touched on the highs. I'd rather see, you know, it's banging around in here. I'd rather see it pop up, pull back, and hold a little higher low, and then bang, I'll be in. And I think that could be a lift that's going to take you up and through 105, through 110, up to 120 and beyond potentially. Does that make sense there? So I think just the time sort of involved, or if we can get some sort of, you know, we've got this pop up through here, probably the same sort of thing, took off, but instead of just building a higher low like I'd be looking for, we come back down and retest, and that would have been a harder one, except what you can see just after that. So if you were sitting there waiting, your prime entry was just there. But let's just clean that up. So here was a very similar type of thing. You know, we really just touched on the low, pushed up, pulled back. But in this move, we took out that high. And we've come all the way back down and test again at that low. And then what you see, it pushed up. A couple of days went sideways. So you probably could have bought that an inside level with really minor risk with a pop up through 9. I mean, I know this is in hindsight, but you're looking for this continuation up, which played out okay. But maybe that's what we could be just waiting for now. I mean, this could just go straight from the lows straight up, and then we could be looking for something like that. So I'll just be keeping an eye on it, and it's probably mainly because of that longer term weekly chart. The longer term weekly chart, you're sort of getting to overcooked at the moment. Potentially, not saying we are, but we could be. Whoops, go minimize. We could be just a bit overcooked up here. You never know. I mean, it does look like it's ready to go. On the daily, it's not looking too bad. The weekly, we've sort of gone from that overbought. We pulled back. We're starting to roll up again, so it might be enough oomph to get us to 120, or or not. Who knows? But either way, I think I'll be leaning towards the upside. A move, at least a pop of some sort. But it's just how much you can get out of it, or you can drag out of that trade. All right. So that was quite easy to hit an hour anyway. All right, guys, we'll probably call it a day there. We'll finish up. Thanks very much for joining me, and we'll be back in on Thursday at 12:30, and we'll just go from there. Have a good couple of days, guys. Hope you enjoyed that. And just remember, if you like what you see, spread the word a bit. Spread the love. Tell your friends, tell your family. All right, guys, thanks very much. We'll have a good couple of days. The market's still edging lower. These banks are under pressure, so just be wary of the next couple of days what happens. We'll speak to you on Thursday. Cheers, guys. Bye.